back. Oh, I need to get out soon because there are people waiting for the parking space. But anyway, welcome back to my compound life. I'm Jonathan. It's great to chat about stuff. In today's video, I think I've made a video earlier, right? So I just want to quickly follow up in regards to Bitcoin again. Okay, so what I'm going to talk about would be, will it be better off lump sum in or pound cost average in, right? Because in the previous video I spoke so much about pound cost average in because it makes a lot of sense, right? I mean, if I've got the money, how I would approach it, it's essentially, what I want to talk about in today's video, right? And pound cost average are great, especially on a volatile asset like Bitcoin or growth stocks or whatsoever, right? And even for your ETF S&P 500, makes absolute sense to pound cost average in whenever it's the low, just so that you get a good spread of your money over a period of time. That is if you have strong conviction on that asset, right? And if you are passive investors to a certain extent, you don't want to keep on opening up your portfolio, so that's why you want to set up in the system to apply pound cost average. Maybe that would be on a... Sorry? No, not me. Alright, some random guy. Ooh, look at that. Some random guy spoke to me on the street. Anyway, coming back to our topic about pound cost averaging, right? So if you're a passive investor, you don't want to keep on looking at your portfolio. And have conviction on certain asset. In our case, Bitcoin, then it makes absolute sense to pound cost average in on a weekly basis. On the internet, there are actually people pound cost averaging in on Bitcoin on a daily basis, right? Like $10 a day or £10 a day, £20 a day, £5 a day, right? So that's the great things about investing in or setting aside money for Bitcoin. It's essentially kind of like a little bank for you, right? That doesn't cost a lot of money for you to put your money in and for it to store it for you, right? So that's why a lot of time Bitcoin has the name or being known as the store of value, a little bit like gold, right? So that's for a passive investor. But for investor that kind of relies on a little bit of income here and there, like myself, so I'm kind of like in my mid-40s, okay, almost entering my mid-40s, right? And I'm currently not working, so I'm kind of retired, but certainly I still have some side hustle every now and then. I still coach in a Singapore university every now and then. I do some consultancy gig every now and then, right? I kind of have to rely on Bitcoin for income, right? So I have a stash of Bitcoin that I'm saving definitely for my retirement and for my future and even for my kids one day, right? But there will also be another portion of my Bitcoin stack that I kind of trade on sell high, right? So of course it depends on your financial situation, right? I strongly recommend not to get into leverage trading unless you are professional traders, of course, that you can read charts, you can keep up with news, etc. Personally, I don't do I do a little bit of leverage trading, but not a lot, and certainly I don't recommend that, right? But as a Bitcoin hodlers, right, I do also get into the tendency of buy and sell during the 4-year cycle, right? So recently I've placed a lot of emphasis to say, hey, it's time to sell because the 4-year cycle is due. Usually Bitcoin peaks in the 4-year cycle, and that's about right now until December, right? Of course, there are arguments that 4-year cycle don't really exist anymore now because Bitcoin are being acquired by institutions, and it might continuously go up, or the 4-year cycle has actually been extended onto next year Q2, right? So it doesn't matter, right? So for me, since I've hodled for such a long time, it makes sense for me to de-risk and take profits, right? So to me, I'm kind of living my life through my Bitcoin in a way. But of course, I do have other income such as properties, some stocks and shares, my ETF, and so forth, right? So all of that little sums, does add up. So this is why I want to emphasize a little bit more on DCA are important. If you kind of are a passive investor that doesn't really want to look at your portfolio, and you have conviction, want to invest for the long term, at least 4 years plus, right? If you enter now, you need to have that conviction that you will have to be 4 years plus, right? And if you do hold that conviction for the next 20 years, right, this sum of money will be tremendous. But at the same time, if you do have lump sum, right, bless you, that have a huge portion of money, maybe that would be from an inheritance or money coming from lottery. I don't know. I don't even think you'd be watching my video if you won the lottery, or it could be bonuses from your company, right? And then you might want to lump sum in. And of course, I think lump sum in are great. Again, if you're a passive investor that don't really look at your portfolio or not gonna be frightened off by the volatility of the Bitcoin asset, certainly go in with lump sum will be great because you have that conviction for investing for the long term, right? Okay, follow up on I think just before the closing, right? I obviously spoke about lump sum, the importance of lump sum in. I think it's extremely important to take into consideration that if you lump sum in and your investment horizon is for a longer period of time, the immediate compounding kicks in, right? As opposed to you lump sum in, you pound cost averaging in on £200 a month, right? So £200 a month for about 20 years, that would be about 48,000, right? As opposed to if you have inheritance of 48,000, you lump sum in and you let that compound, you let the Bitcoin compound annual growth rate to compound for 20 years, right? Imagine that immediate 48,000 pound that you put in place, lump sum in, will immediately kick in, and immediately you're gonna go into the second year with additional 30% of that 48,000. So it's 48,000 plus 30% of that on the second year, right? So the compounding would definitely be much more tremendous if you kind of pound cost averaging in on a £200 a month. Okay, so I think that's important to highlight as to give you the kind of the magic of compounding, right? So it's really important for us to recognize that in our 40s years of age, we don't really have much time to compound anymore. So it's always important to pick the right asset, pick the right horse, and let that compound for a tad little bit longer of time. Okay, that's what I wanted to highlight. Thanks for watching my Compound Life. I'll see you soon. Drop a like, hit subscribe. Thank you. Bye.